caps and small caps capitulate. But we've got a management waiting by. South Indian Bank, and those shares are up nearly 3%. The net profit is up 45%. Deposits have seen an 8.5% year-on-year growth. We have with us PR Seshadri, the MD and CEO of the bank, joining in. Thank you very much, sir, for joining in. While there's a big jump in the net profits, as we pointed out, the stock is doing well. There's one number which is a bit concerning, and that's the increase we've seen in the slippages. Quarter on quarter, your slippages have gone up 20% and stand closer to 350. What led to that? What were the big accounts, which went bad this time? And what can you guide on slippages going forward?
Thank you very much for having me on the show. Slippages, we seem to have a cyclicality in slippages. So when I look back in history, I find that the first quarter tends to have slightly higher slippages than other quarters. And in this quarter, whilst it was low, slippages were lower than first quarter of the prior year, they were still higher sequentially from the prior quarter. We had no single large ticket loan slipping, so no corporate slippage during the quarter. Most of the slippage was on the small business and agriculture side. So there's nothing material to report. I mean, in the sense that we think that this is business as usual. It's just a little bit of seasonality playing through. Recoveries continued to be reasonably strong. We came in at about 309 crores of recoveries. So slippages did exceed recoveries for the first time in some time. But having said that, we think that the situation should correct and reverse itself as we go forward.
Right. Mr. Seshadri, good morning. Thank you for joining in. And you mentioned that some of the stress came in from the smaller businesses and the agri side. Do you see that as a trend that is likely to persist, considering the monsoons have just begun now and there might be some recovery going forward? You mentioned about seasonality as well. Do you expect that slippage number to recover as FY25 goes by? And what you can guide on the asset quality as well, because that was flat compared to the March quarter. So do you see that number trending down as well?
From an asset quality perspective, if I may answer the second question first, asset quality perspective, we think that the trend that we've been displaying over the last year and a half will continue. And we think that both gross as well as net NPA numbers should continue to go downwards. And we are hoping that we are closer to the 1% mark, maybe 1.1, 1.15 at that level on the net NPA number by the end of this financial year. With respect to slippages by themselves, I don't see any trends here. It's just that, Q1 for us tends to be the quarter with the highest slippage, and that seems to be seasonality that we have demonstrated over the years. And that's essentially because of the nature of how this organization works. And we think that, as we go forward, slippage numbers should moderate back to the levels that we normally see. Therefore, we are not, at this juncture, concerned in any business line to say that there's any form of trend that is emerging, actually.
Okay. When you say slippages should get back to normal levels, we're talking about 300 on a quarterly basis. And also, if you could give us that number there. And also on margins, we've seen a drop in your net interest margins quarter on quarter, year on year. What's the outlook on NIMs?
Again, answering the second question first, NIMs, we were at 3.26% or thereabouts for the quarter. We are, managing NIMs on two fronts. One is by ensuring that our cost of borrowing remains reasonable. So our quarter-on-quarter sequential increase in cost of funds was only six basis points. So I think we are doing a fairly good job there. And we are trying to increase our NIMs by ensuring that we change the product mix on the asset side. So we're currently approximately 42% of our book is corporate, and we are trying to change that mix to bring that down to about a third and get higher yielding assets, both from MSME as well as retail, to take the slack as a consequence. So if you're able to do that, we think the NIMs will actually widen from where we are today. But that process will take time. And we are hoping that in the medium term, we can get this to about 3.5 or thereabouts.
Right. Mr. Seshadri, I wanted to speak to you about your deposits. They were up around 8.4% year on year and around about 1.5% sequentially. In normal terms, you'd consider that as slightly weak. And you're also hearing reports of a lot of people, the deposit withdrawals coming in to be put into the equity markets. Of course, this is all reports that are being circulated. But what are the steps that you're taking to mobilize more deposits, especially considering that there is so much competition out there? And you might want to say that your depositor is almost spoilt for choice. So what steps are you taking to ensure that that deposit growth figure returns to double digits, or are planning on doing so?
From a deposit perspective, actually, we had a very, very good quarter. Our CASA balances on a sequential quarter-on-quarter basis grew approximately 6%. These are average balances. So I think we are an outlier when it comes to CASA balance growth. What we are doing is we're increasing engagement with our customers. We do have approximately 8 million customers. And at the branch level, we're trying to ensure that we engage with them as intensively as possible. And that's beginning to pay off for us. On retail deposits, given the fact that our asset growth, we've been ensuring that we are in the 10 to 12% range. We really don't need more deposits, so we are ensuring that our price control on the deposits is very, very tight. So as of today, we are priced actually significantly lower than some of our larger peers in this market and still growing at 8%. So we think that we have a solid deposit franchise, and were we to require more deposits, we think that we can bring it in. And I think we've demonstrated that on the CASA front. There has been very substantial growth on CASA, which we're feeling really good about.
One final question, Mr. Seshadri, and your loan growth has remained healthy, if I can say that, around about 11%, if I'm not wrong. Yeah, 11% year on year. What's your outlook on the loan growth going forward? And if I can ask you, are you being slightly conservative when it comes to growth? And what's your outlook on the loan growth front for the rest of the year?
So we've been telling people that we want to grow between 10 and 12% for the year. Our challenge is not in growing the book. Our challenge is in rebalancing the book so that we can grow our NIMs. So from our strategic perspective at this point in time, our focus is more on profitability and ensuring that we can get greater revenues for the same balance sheet size and for the same amount of risk that we are running. And therefore, we are prioritizing the change in the balance sheet mix over growth. So that, consequently, we wish to grow between 10 and 12% for the year, which is where we think we have a sweet spot from a liability pricing perspective.
All right, Mr. Seshadri, we leave it at that. Thanks a lot for joining in, sharing with us your outlook on the road ahead for FY25. Wish you good luck for the rest of the year as well. That was the management of South Indian Bank. Pretty confident about the road going ahead. The stock also doing well for itself, was up 3.5% when we last spoke of. And so a good reaction to the earnings coming in there for South Indian Bank. But time for a short break here on Trading Hour. Up next, Reliance Industries is expected to report its first quarter numbers later this evening. We'll get you all the key expectations on the other side. Stay tuned.